This will end very badly. Hey guys, Britt here. Welcome to End Times Bible Prophecy. Will U.S. markets continue to surge to new all-time highs, and along with those all-time highs, historic overvaluations, setting the stage for an epic crash? 100% of the time, history tells us when we see the data we see now, it ends in calamity for investors. The only question is, when will it all come crashing down? So in today's video, we're going to look at the data points. What is the data telling us right now? What does history tell us is going to happen next? We're going to talk about why it could go higher and get even more out of sorts before it comes crashing down. And then most important, we're going to talk about why this is a unique opportunity to share the good news of Jesus Christ with a lost and dying world. So guys, before we do that, before we get started, let's take a look at this right here. Just a reminder. So we had this article on Saturday, how to prepare for central bank digital currency, things that we can do right now to guard against this. This isn't necessarily a tribulation event. This is a question that I'm asked a lot is, what do we do if they roll out central bank digital currency? So we went through that and we talked about what steps could be taken to try to mitigate the impact of that. But guys, at the bottom of that article is a link to Wednesday's live Q&A with Britt and Jenny. So just a reminder, 7 p.m. Eastern Standard Time this Wednesday, we will have the September monthly live Q&A with Britt and Jenny. So leave any questions you have at the bottom of that Substack article or at the bottom of this Substack, and we'll put those together and answer those. If you aren't able to make it to the live session, we'll answer those. Then the replay will come out on Thursday, God willing. So leave your questions, prepare your questions. We hope to see you live at 7 p.m. on Wednesday. If, again, this is the live Q&A is for paid subscribers to the Substack. However, if you want to be a paid subscriber, but you just cannot afford it, you're experiencing financial hardship, or you're on a fixed income and you cannot afford it, just send me a message over on Substack. That should be at a link to that at the bottom of all the emails that go out. Let me know, and we will gift that to you. We don't want anyone to miss out on the information that we provide here due to financial considerations. But if you are able to pay for that, then great. That helps pay for those that can't, and it helps pay for us to be able to pay our bills so that we can put this information together. So again, a reminder that the live Q&A with Britt and Jenny is this Wednesday at 7 p.m. and the link is at the bottom of Saturday's article. So let's dive into the details, the data of what is going on with U.S. markets and the extreme overvaluations we're seeing. So let's start right here with this. So this is the Buffett indicator. We've looked at this a number of times. This is named for Warren Buffett, the most famous investor in the world. And this looks at the total market cap, so the total value of, in this case, the Wilshire 5000. So this is a representation of the entire U.S. stock market, divided by gross domestic product, or the total output of the entire U.S. economy. And a reasonable valuation is somewhere around 60% historically. We're now at an all-time high of 217%. The S&P 500 hit an all-time high this past Thursday. It fell off a little bit on Friday. But guys, this has never before been seen. You look at this data goes back to the 1970s, but at the height of the dot-com bubble, it was 138%, and we're now at 217. So that shows you how extreme these overvaluations are. We also have this right here. So this was from Peak Financial Investing with Chris Martinson. He says the NASDAQ market cap is now more than 105% of GDP, the highest it's ever been. For comparison, it was closer to 60% at the peak of the dot-com bubble. He says if you're not paying attention to the risk in the market, you're not an investor, you're a gambler. And hold on to that thought because we're going to talk about that more. We see many signs that people are engaged in gambling and speculation, even if they think they're investing. They are not investing. About this, we've got this from the Kobayashi letter. It says, this is insane. The NASDAQ's market cap, again, its valuation relative to the US M2 currency supply has hit a record 176%. This means the market value of the NASDAQ is nearly twice as large as the total stock of liquid currency in the economy. The ratio has now exceeded the 2000 dot-com bubble peak by 45 percentage points. Never in the history of financial markets has the rise in stock prices exceeded the growth of currency supply by this much. At the same time, the NASDAQ's market cap relative to US GDP has risen to a record 129%, almost double the dot-com peak. How much further can it go? And we'll address that later in this video. I think this could go even higher. No doubt, history tells us this is going to come crashing down. But in the meantime, it may go higher before it crashes. How about this? This is from Just Dario. He says, the larger this bubble grows, the less people care. Narrator, history in the making. And he has this chart here of the market value of the top 10% of largest U.S. stocks. And just how extreme this is. They're making up just a handful of stocks make up an increasingly larger percentage of the market indices. And that's important because most people, their retirement is invested in these market index funds. And they think they're diversified, which is what the Bible teaches us, but they are not. Because as we'll see, a large percentage of the entire market is just a handful of stocks, such as this right here. We got this from Global Markets Investor. They say such concentration has never happened. NVIDIA, so one stock, one company, they specialize in making chips for the AI revolution. They're supposedly powering the processing of the AI revolution. It says NVIDIA makes up 8% of the S&P 500's market cap, the highest for any company in history. So again, most people think if they buy the S&P 500, they're buying an equal share in 500 different stocks, which would, if that were true, it would mean that no stock's value would make up more than 0.2% of your holdings. But here we've got NVIDIA at 8%. That's 40 times that 0.2%. It says Microsoft and Apple shares are 6.5% and 6%. The top 10 represent a record 40%. So 10 of the 500 stocks in the S&P 500 make up 40% of the S&P 500's value. I want you to try to wrap your mind around that. That is the opposite of what the Bible teaches us we should be doing. In Ecclesiastes chapter 11, verses 1 through 2, it says we should diversify for we don't know what risks lie ahead. And here we've got just 3 stocks that make up over 20% of the entire value of the S&P 500. What happens, I might add, when people realize, well, NVIDIA, there's not demand for their chips anymore because they've overbuilt, just as they did in the dot-com era. They were laying all this fiber optic cable all over the place, and then they realized, well, we got a little bit ahead of ourselves and we didn't need to do all of this. And not to mention there are people questioning some of the accounting that's taking place with both NVIDIA and Microsoft. So what happens if these revert back to the mean? They're going to drag the whole market with them. About this from Global Markets Investor. It says, this is unthinkable if NVIDIA were a stock market. Just one stock, right? If this one stock were a stock market, it would be the 4th largest in the world. NVIDIA's market cap is only behind the United States, China, and Japan. keep in mind, the entire markets, the entire US stock market, the entire Chinese stock market, the entire Japanese stock market, Nvidia is bigger than the UK stock market. It's bigger than the French stock market, bigger than the Canadian stock market, and bigger than the German stock market. It's this insane stat, and it absolutely is. I mean, look at this. It's bigger by far than these other stock markets. How about this from Justario? He's referencing this bar chart tweet. It says tech stocks are outperforming the S&P 500 by the largest margin since the peak of the dot-com bubble. And he says, I still see so many people questioning whether we are in a bubble or not, a case of boiling frog syndrome on a global scale. And I would say absolutely. In fact, I can assure you, in the comments on YouTube especially, there will be people saying, you keep saying this over and over. It hasn't happened yet. How many times do you have to say this? You're so wrong. I've never claimed the market's crashing next Tuesday. All I've done is point out these extreme overvaluations that are now even more extreme than before, and that every time in history we've seen this, it's ended badly. And we would have to believe this is the one time in history that it turns out differently. And I find that kind of hard to believe. So in due time, we'll see a reversal of those thoughts and people saying, well, everybody could see this coming. It's no surprise. But guys, right now, there's a whole bunch of people saying, no, you're wrong. Everything's just fine. How about this from bar chart? It says the percentage of global stocks trading above 10 times EV to sales has reached the highest level in history, surpassing both the dot-com bubble and the 2021 meme mania. So again, another record overvaluation, or this from bar chart. Now these next two are really show the extent of the rampant speculation, the outright gambling that's taking place in the markets. I would say we have not seen this since 1929. So this says 0 DTE, so that's 0 days to expiration options, now account for more than 60% of total S&P options volume, the highest in history. So options are contracts that give you the right to buy or sell specific securities such as stocks. And 0 date to expiration means that contract expires that day. So it's created that day, it expires that day, and it's traded throughout the day. When you buy one of these, you are not engaged in investing. Some people might be using it, more sophisticated traders might be using this as a hedge for other things they're doing, but a lot of individual investors are buying these thinking they're investors when it's really gambling. When you put a time constraint like this on, quote, an investment, you're gambling, you're speculating. And 60% of the total options volume, highest in history, are these speculative options. How about this? The same 0 day to expiration options now account for almost 80% of NASDAQ options volume, a new all-time high. Now look at this chart. We were at less than 20% prior to the COVID crash. Got down to probably less than 10% in the midst of that crash. Now we're at almost 80, so 5-fold increase in what we're seeing of the speculative gambling behavior. What accounts for this other than a euphoria of fear of missing out? And again, history tells us this ends badly. So again, what are these 0 DTE options? So this is from Google. Look it up in Google. It says a 0 DTE option is an options contract that expires on the same trading day it's bought and sold, meaning it has 0 days to expiration, meaning it becomes worthless at the end of the day. These options are highly sensitive to the price of the underlying asset and time decay, because again, they become worthless after a day, offering the potential for rapid gains or significant losses due to their short lifespan. Because of their complexity and high risk, zero DTE options are recommended for sophisticated traders with deep understanding of the market and a well-defined strategy. So use of these has quadrupled in the last 5 years. Have the number of sophisticated traders with a deep understanding of the market and a well-defined strategy quadrupled in the last 5 years? No, what has quadrupled is the number of people willing to gamble in these options, thinking they're investors or telling themselves that they're investors when they are speculators. It's no different than if they went into a casino and rolling dice. Maybe they get lucky for a few rolls and they think, I can never lose, or I'm a really good dice thrower, I can beat the house, and then turns out poorly for them. The same thing is going to happen here. How about this? We had this from Peak Financial Investing. It had better be different this time, and it has the S&P 500 price to book value ratio at an all-time high, higher than what we saw during the dot-com bubble. Again, every indication is we are in a massive bubble we've never seen before. How about this? From Jeff Winiger. He says the small cap Russell 2000 Growth Index, so this is 2,000 small-sized companies, at least in terms of publicly traded stocks, has 31% of its weight in companies with negative earnings. When the stock market peaked in October 2007, 18% of the index was unprofitable. After the failure of Lehman Brothers, it jumped to 27%. Right now, it's higher than that. So 31% of the value of the Russell 2000, again, a widely traded index, is comprised of unprofitable companies. And in the aftermath of the failure of Lehman Brothers and the greatest financial crisis since the Great Depression, we didn't reach the levels we're at right now. This is bad, guys. And where does this all lead? Well, we've talked about this before. And I think the market is completely forgotten. People have forgotten. But here we have a list of the largest daily percentage changes in the S&P 500. So in red on the right, we had the biggest down days in S&P 500 history. And in green over on the left, we had the biggest up days in S&P 500 history. All of these dates on both sides coincide with the biggest bear markets and market crashes in U.S. history. The Great Depression. We have the 1987 Black Monday stock crash. We had the pandemic meltdown of 2020. We have the great financial crisis in 2008. So all of those events, every single down day is related to one of those events. Also, every single up day is related to one of those events, except for this year. We had the 8th biggest up day in S&P 500 history back on April 9th. We don't have a corresponding top 20 down day for 2025 yet, but history tells us it's coming, that you don't have isolated incidents like this. This is a sign of massive volatility. It's a sign of problems in the market. It's not a sign of good things to come. That's contrary to what most people think. Most people think, well, up is good, right? Well, slowly up tends to be good. Massive up is a sign of a broken market that's trying to find itself. It's a sign of an overall declining market over the course of 2 to 3 years. It's not a good sign. This is not a good sign. All that said, guys, the market could go up. Markets in general could go up even higher and become even more overvalued from where they are now, and probably likely will, based on what we're going to look at right here. So this is from Cointelegraph. It says 1 in 4 UK adults are open to investing in crypto for retirement. And I would say that in order to be accurate, this headline should be changed to 1 in 4 UK adults are open to speculating or gambling in crypto for their retirement, because that's what they would be doing. And they actually state that in the survey, maybe not explicitly, but we'll look at that right here. So this says a quarter of British adults polled said they're open to crypto forming part of their retirement plan, suggesting that crypto could claim a larger share of the UK's multi-trillion-dollar pension fund market. UK insurance company Aviva said on Tuesday that its poll of 2,000 UK adults found 27% were open to crypto in their retirement funds, with just over 40% of those open to crypto saying they were motivated by the higher potential returns. Why are they motivated by higher returns? Well, because crypto has gone up, right? A friend of a friend of a friend put $1,000 in some meme coin and became a millionaire. So that's what I should do too. Guys, if you were around 25 years ago, you saw this happen in the dot-com mania. People were doing the same thing. Well, I put all my cash in this dot-com stock and that dot-com stock and this tech stock, and wow, look at what it's done. And that ended in tears. The NASDAQ declined 80% from its highs over the course of the next 2.5 years. So we're looking at the same thing is going to happen here. All of these cryptos, maybe there's 2 or 3 cryptos that actually become a big deal 5, 10 years from now, whenever it might be. But most of these are going to become worthless. Yet people, 27% want to put their retirement funds in things that are going to become worthless. This is bad, and it gets worse in a second as we read on. It says the survey was conducted by Censuswide and also found 23% of those polled said they would consider withdrawing part or all of their existing pension to invest, again, speculate or gamble in crypto. That is not going to turn out well. It says the poll came as President Trump signed an executive order earlier this month permitting U.S. 401k retirement plans to include Bitcoin and other cryptocurrencies, opening access to more than $9 trillion in assets. And guys, this is not going to turn out well. So what are they talking about? We had this from First Squawk. It says Trump will sign executive order on Thursday, this already took place, that aims to allow private equity, real estate, cryptocurrency, and other alternative assets in 401ks. So guys, these are speculative investments. Private equity and real estate in particular are very illiquid, meaning if you try to sell a cryptocurrency today, you could probably find a buyer very easily today. You try to sell a stock or a bond today, you can probably very easily find a buyer today, maybe even in the next second, right? They're very liquid, meaning you can sell them for cash very quickly. However, real estate and private equity are the exact opposite. You might go months, maybe even longer, trying to find a willing buyer. And not only that, we're at all-time highs in real estate. So using your retirement funds right now to, quote, invest in real estate, bad idea. There's no real reason you would want to use a 401k to invest in real estate. There's tax advantages outside of the 401k for doing that. I don't know why you would want to do that. Private equity, there's trillions in losses. It major Wall Street firms and private equity that they can't unload. There's no willing buyers. So they're getting this executive order passed because they're going to push this off on unsophisticated investors who think, well, this will help generate higher returns for me. There will be all sorts of promises that come from the Wall Street firms pushing these products. They'll push them down on Main Street, and all of these losses will be felt by the people who buy into this idea that private equity is going to save their retirement. In the end, it's going to destroy it. Plain and simple. So this is just taking advantage of people by putting this in there. This is not going to end well, unfortunately, guys. History tells us this is going to end very poorly. However, guys, this is a great opportunity for you and me. We need to be preparing ourselves. The Bible tells us we should always be ready to give an account for the hope we have in Jesus Christ. And Jesus says this right here in Matthew chapter 7, verse 24 through 27. He says, anyone who listens to my teaching and follows it is wise, like a person who builds a house on solid rock. Though the rain comes in torrents and the floodwaters rise and the winds beat against that house, it won't collapse because it's built on bedrock. But anyone who hears my teaching and doesn't obey it is foolish, like a person who builds a house on sand. When the rains and floods come and the winds beat against that house, it will collapse with a mighty crash. Guys, we've been over this before. If you've built your life on Jesus Christ, if he is the center of your life, you're a born-again Christian, if the full weight of your life rests on Jesus and in him, you're fully reliant on him, you have built your house on solid rock, and whatever comes in this world, market crashes, global tyranny, revolutions, you will not be destroyed. You will not collapse, because Jesus will still be Jesus. He is still all-powerful in the midst of those events, before those events, after those events. But guys, the problem is many of our friends, our neighbors, our coworkers, even some of the people who join us in church on Sunday have not built their lives on Jesus Christ. They built their lives on a career, a job, a retirement account, their 401k, their crypto, quote, investments. And when all of this comes crashing down, their lives are going to come crashing down too. And that's an amazing opportunity for us to share the gospel of Jesus Christ, because when they see, well, why haven't you collapsed? Meaning, why are you in a sense of peace, a state of peace in the midst of all of this? You have a peace that surpasses all understanding that I cannot fathom. Why is that? And you can tell them about Jesus Christ, that you experience that peace because of your relationship with Jesus Christ, because you know him. And it gives you the opportunity to share the good news of Jesus. So guys, be preparing yourself for opportunities to evangelize to your friends, your neighbors, your coworkers, all the people around you when this time comes. Because again, all the data tells us that based on history, we are in an extreme bubble right now. And again, as I said before, there will be a bunch of people in the comments that say, oh, here comes Chicken Little Britt. He's saying that the market's going to crash again. Guys, the reason I bring this up, this has profound implications for everybody in the world. It has huge implications for the rollout of central bank digital currency, tokenized assets, digital ID, this whole infrastructure that will become the mark of the beast system. It's indistinguishable in capability and function from the mark of the beast system. And because this is an opportunity we can see coming to share the hope we have in Jesus Christ. Make sure you're prepared to do that. Because this opportunity, there's going to be a bunch of broken people. And while we don't want to see broken people, we do want to see broken people if that's what it takes to get them into a relationship with Jesus Christ that will transform their life for the better. So sometimes people have to hit rock bottom before they make a change, before they wake up and recognize the problem. And for people that have put their hope in anything other than Christ, they need a wake-up call. They need to know where their hope should be. So make sure you're preparing yourself for this moment as well as any other moments that may come. We never know what opportunities may come in our day that God gives us to share the good news of Jesus. So make sure you're doing that. So guys, leave your comments below. Again, so update on my dad. My dad's doing better. He's trending better. He's in the hospital. But because he's been in the hospital an enormous amount of time over these last 3 months, but especially the last week, I've spent over 40 hours gone and at the hospital getting things together. So I've been able to get these videos done, get the articles done. But as far as reading comments, responding to emails, responding to messages, I have a lot of those that have built up in the inbox. I will get to those eventually. But if you haven't heard from me, I'm not ignoring you. I just do not have the time right now. So, but eventually I will get to those things, so just bear with me. So, and thank you all for your prayers. I know many of you have been praying, and I think that has made an enormous difference. So thank you so much. But leave your comments below, and God willing, I'll see you on Wednesday.